Imagine living in America with no W-2, no tax return, no April deadline, and no IRS. Sounds great, right? But here's the strange part. The government was still collecting money. It was paying soldiers, building ships, running courts, and trying to defend a rapidly growing country. So, if nobody was checking your paycheck, who was collecting the taxes, and where were they waiting? Not outside your house, not inside an office filled with financial records. They were standing beside the ocean, watching ships arrive. Because before the federal government learned how to tax your income, it taxed the things you bought. And the journey from a customs officer holding a paper ledger to the modern IRS is filled with smugglers, angry farmers, burning buildings, political corruption, and one uncomfortable truth. America didn't just fight a revolution over taxation. Soon afterward, it nearly tore itself apart trying to collect taxes of its own. Let's go back to where the trouble began. Long before the United States existed, the American colonies already had taxes. Colonial governments taxed land, property, certain exports, and goods entering local ports. Some settlers also owed annual payments connected to the land they occupied. But this wasn't anything like the system Americans know today. There was no massive national database, no instant communication, and no easy way to track people living across thousands of miles of forests, farms, and isolated settlements. Britain was also more than 3,000 miles away. A tax law could be written in London, cross the Atlantic on a ship, and still mean almost nothing once it reached America. Why? Because enforcement was a mess. Customs officials were supposed to inspect ships and collect duties on imported products, but colonial merchants became very good at avoiding them. Cargo was hidden, documents were altered, goods were unloaded at secret locations. And yes, some customs officers were bribed. Smuggling wasn't a small underground operation. It became a normal part of business. Everybody knew it was happening. For a long time, Britain mostly tolerated it. Then a war changed everything. In 1763, Britain emerged from the French and Indian War with a much larger empire and an enormous financial burden. British leaders looked at the colonies and reached a simple conclusion. We protected them, now they should help pay. The colonists saw it differently. They believed Britain was using the war as an excuse to tighten its control. In 1764, Parliament passed the Sugar Act. The real shock wasn't simply the tax itself. Similar duties had existed before. The difference was enforcement. Britain sent officials to crack down on smuggling. Ships could be searched. Cargo could be seized. Merchants accused of violations could face courts without local juries. Suddenly, rules that had once been ignored became very real. But Britain didn't stop there. 1 year later, it passed the Stamp Act. Now, official stamps were required for newspapers, contracts, licenses, legal papers, and other printed materials. Think about the change. The Sugar Act met merchants at the harbor. The Stamp Act followed ordinary people into their daily lives. And that was the breaking point. Crowds protested. Stamp distributors were threatened. Effigies burned in the streets. Businesses joined boycotts. The colonists weren't simply saying, "This costs too much." They were asking something far more dangerous. Who gave you the right to take it? They had no elected representatives in Parliament, yet Parliament claimed the authority to tax them. That fight eventually produced one of the most famous political slogans in American history: "No taxation without representation." Then came new duties on items like glass, paper, paint, and tea. British officials became symbols of outside control. Soldiers were sent to protect authority in places like Boston, making an already tense situation even worse. And in December 1773, protesters dumped hundreds of chests of tea into Boston Harbor. Here's the twist. The Boston Tea Party wasn't really about Americans being unable to afford tea. It was about accepting Parliament's power. If the colonists quietly purchased the tea, Britain could argue that they had also accepted the tax attached to it. So the tea went into the water. Britain responded harshly. The conflict intensified. And soon, a fight over political power and taxation became a war for independence. After defeating Britain, American leaders faced a major problem. They needed a national government, but they were terrified of creating another powerful central authority. So, under the Articles of Confederation, Congress was denied the power to collect taxes directly from citizens. Instead, it requested money from the states. Yes, requested. Congress calculated what it needed and asked each state to contribute a share. But if a state refused, the national government had almost no practical way to force payment. Imagine 13 roommates sharing a house. The electricity bill arrives, but nobody can make the others pay. One roommate contributes everything, another pays half. 3 promise to pay later, and someone quietly disappears when the rent is due. That was America's financial system. The government owed money from the Revolutionary War. Soldiers were waiting to be paid. Foreign creditors expected repayment, but the national treasury was often desperately short of cash. America had won independence, and now it was in danger of going broke. The crisis helped convince political leaders that the country needed a stronger constitution. In 1787, delegates met in Philadelphia and designed a new federal government. This time, Congress received a power it had previously lacked, the power to collect taxes. But that created a sensitive question. How do you collect money from people who recently fought a war against tax collectors? The answer was brilliant and relatively simple. Don't begin with their income. Begin with ships. In 1789, the federal government established a customs collection system. Officers were placed at ports such as Boston, New York, Philadelphia, and Charleston. When ships arrived, these officers examined cargo records, calculated duties, and collected money on imported goods. This system offered a major advantage. The government didn't need thousands of officials traveling across the country. It only needed to control key entry points. The products came to the collectors. For decades, customs duties supplied much of the federal government's money. But don't assume ordinary Americans avoided the cost. Importers usually paid the government first. Then they could raise their prices. So a customer purchasing sugar, coffee, fabric, glass, or tools might indirectly pay a federal tax without ever seeing a government official. The collector remained at the port, but the cost traveled all the way to the store. It worked fairly well during peaceful periods. But Treasury Secretary Alexander Hamilton knew customs duties might not always be enough. America owed serious debts. The new government also needed to prove that its laws meant something beyond the coastal cities. So officials selected a product made far from the ports, whiskey, and that decision nearly caused another rebellion. In 1791, the federal government imposed an excise tax on distilled spirits. To wealthy officials in the East, whiskey looked like a convenient product to tax. To Western farmers, it was essential. Transporting large amounts of grain over rough mountain roads was difficult. Converting that grain into whiskey made it easier to store, move, and sell. In some frontier communities, whiskey was practically currency. Then federal revenue officers arrived demanding payment. Small producers believed the system favored large commercial distilleries. Worse, many frontier communities had very little cash available. Anger quickly turned into resistance. Tax collectors were intimidated. Some were attacked. People who cooperated with federal officers could be rejected by their own neighbors. Then, in 1794, the situation exploded. Hundreds of armed men confronted federal authority in western Pennsylvania. The home of regional tax supervisor John Neville was attacked and burned. There was even talk of the Western Territory breaking away. President George Washington faced an enormous test. If he ignored the rebellion, federal laws might appear meaningless. But using military force against tax protesters carried painful irony. Hadn't Americans recently fought against a government that used force to collect taxes? Washington ultimately mobilized thousands of militia troops. The resistance collapsed before a major battle occurred. The government had proved it could enforce its laws, but it had also revealed something shocking. The nation created by a tax rebellion was now willing to send an army to protect its own tax system. For much of early American history, the government continued relying heavily on customs duties, but that approach contained a fatal weakness. During war, trade could collapse, and when trade collapsed, customs revenue fell, exactly when the government needed money most. The War of 1812 forced Congress to revive internal taxes temporarily. Then, the Civil War changed everything. The conflict required money on a scale the country had never seen before. The government needed to recruit and pay huge armies, purchase weapons, build ships, operate railroads, and supply troops across an enormous battlefield. Tariffs weren't enough. In 1862, President Abraham Lincoln signed legislation creating the Office of the Commissioner of Internal Revenue, the direct ancestor of the modern IRS. The government began taxing incomes along with numerous products, occupations, businesses, and transactions. This required a completely different kind of system. Customs officers could inspect physical cargo. Income collectors needed information. How much did someone earn? Where did the money come from? Was every payment reported? Was the person telling the truth? The government was no longer only watching America's borders. It was beginning to examine America's private financial life. So, who collected taxes before the IRS? There wasn't just one answer. Customs officers collected duties at ports. Revenue officers inspected whiskey production. Assessors recorded land and property. States were asked to finance the national government. And temporary agencies appeared whenever war created an emergency. But here's the bigger story. Before the government could easily track individuals, it taxed economic bottlenecks: a ship entering a harbor, a still producing whiskey, a legal document requiring a stamp, a business manufacturing taxable products, and finally, a paycheck. That's how the system evolved, not in one giant step, but crisis by crisis, war by war, tax by tax. The IRS wasn't created out of nowhere. It emerged from nearly a century of experiments, failures, rebellions, and financial emergencies. Every crisis pushed the government closer to the citizen. First, it watched the coastline. Then it entered the marketplace. Then it inspected production. And eventually, it began recording personal income. Today, most Americans never meet the person collecting their federal taxes. Money can be withheld before a paycheck even reaches the bank. The collector who once stood at the harbor hasn't vanished. The collector has simply become invisible. And maybe that's the most surprising part of the entire story. America began by fighting tax officials who appeared at its ports. But the modern system became far more powerful when it no longer needed anyone standing there at all.